What is STRC? Strategy's dividend-paying Bitcoin preferred stock explained. Most dividend stocks pay 4 times a year. In June 2026, Strategy went further. It won approval to pay holders of one security in cash twice every month. That security is STRC, a high-yield preferred stock backed by the company's Bitcoin treasury. This video explains what STRC is, how it works, and the risks to weigh first. It is educational only, not investment advice. Chapter 1: STRC at a glance. STRC is the Nasdaq ticker for Strategy's variable rate Series A perpetual STRC preferred stock. It is preferred stock, a separate security from Strategy's common stock, which trades as MSTR, and it is not the same as owning Bitcoin directly. STRC is perpetual, with no maturity date, and carries a stated value of $100 per share that also sets its liquidation preference. It is cumulative, so any skipped dividends build up rather than disappear, and it cannot be converted into common stock. It is callable. Strategy can redeem it at $101 per share whenever it chooses. Importantly, STRC is not secured by any specific Bitcoin. Chapter 2: About Strategy Inc. Strategy began in 1989 as the software firm MicroStrategy and rebranded to Strategy in early 2025 to reflect its Bitcoin-first identity while keeping the MSTR ticker. Michael Saylor, who pioneered the corporate Bitcoin treasury playbook, is executive chairman, with Phong Le as president and chief executive. It is the world's first and largest Bitcoin treasury company. As of June 2026, it holds roughly 847,000 Bitcoin, around 4% of all the Bitcoin that will ever exist. Its preferred stock programs, STRC among them, are a key engine funding its ongoing Bitcoin buying. Chapter 3: How does STRC work? STRC raises capital that Strategy puts toward buying more Bitcoin, and in return, it pays a high, actively managed dividend. The rate is variable and set at Strategy's discretion. It launched at 9% in mid-2025 and has since climbed to 11.5%. STRC paid monthly until July 2026, when Strategy switched to 2 cash payments a month, on the 15th and the final day. The annual rate does not change. It is just split into smaller, more frequent installments. Strategy openly designed STRC to trade near its $100 stated value, adjusting the dividend to defend that band. Chapter 4: STRC in the preferred stack. STRC is one of 4 preferred shares Strategy has issued, each with a $100 stated value but different terms. Strife pays a fixed 10% and ranks most senior. STRC sits next, the only one with a variable rate and the only one paying twice a month. Strike pays a fixed 8% and can convert into common stock. Stride pays a fixed 10% and ranks most junior. In a wind down, all of them rank behind Strategy's debt but ahead of MSTR common stock. STRC's higher headline rate reflects its place below Strife in that order. Chapter 5: The appeal for income investors. For income-focused investors, STRC's draw is a double-digit target yield, 11.5% as of mid-2026, paid in cash twice a month. It offers indirect Bitcoin exposure without buying and storing crypto yourself, and it is typically far less volatile than Strategy's MSTR common stock. Because it is cumulative, any skipped dividend accrues and must be paid before junior shares, and it ranks ahead of MSTR common in a wind down. For U.S. holders, payouts have so far counted as a return of capital rather than ordinary dividend income, which can defer tax, though that treatment is decided year by year and is not guaranteed. Chapter 6: Risks to weigh first. STRC carries real risk. Dividends are declared at the board's discretion and are never guaranteed. The price can fall well below par. STRC sank to record lows below $80 in late June 2026, around 20% under its $100 value, as Bitcoin dropped sharply. The shares are not secured by any Bitcoin, and the dividend leans on continually raising new capital rather than operating profit. Strategy's finances are tied to Bitcoin, and it reported large unrealized losses when Bitcoin fell in early 2026. The rate can be cut within limits. Strategy can redeem the shares at $101 whenever it chooses, and Stretch ranks junior to the company's debt. Chapter 7: Stretch versus Bonds and SATA. Stretch borrows the shape of a traditional preferred share but behaves differently. The headline difference from a bond is the source of the yield. A bond coupon is a contractual debt the issuer must pay or default, while Stretch's dividend is paid only when declared, and as equity, it ranks behind any debt strategy holds. A missed Stretch payment accrues rather than triggering a default. Stretch also came first in this niche. Strive's SATA preferred stock was modeled closely on it, copying the $100 anchor, the variable rate, and the Bitcoin treasury flywheel, then pushing payments all the way to daily. Bitcoin-backed preferred stock is a young idea, and strategy is its pioneer. Stretch pairs a double-digit yield with indirect Bitcoin exposure, but it is speculative. There is no operating business funding the yield beyond the treasury and ongoing share sales, and the terms have shifted repeatedly since launch. Whether it fits a portfolio depends on how you view crypto as a long-term holding. Read the full article on Blockspot.io. Would you hold a Bitcoin-backed preferred stock like Stretch? Let us know in the comments below.